Alex, nice to
Hi.
have you. Thanks for joining the podcast today.
I'm excited. It's my first time doing this.
So let me just do a quick intro of Alex. Alex Berry-Santoro is an attorney based out of Detroit, Michigan. He's the managing attorney for Maxwell Dunn Law, and he has built a great reputation there. He holds a Juris Doctorate from Western Michigan University Cooley Law School. That's a mouthful. And has admitted practice in the State Bar of Michigan, as well as several different courts. It showed that you're serving as an associate editor for both the National Association of Consumer Bankruptcy Attorney Law Journal and the State Bar Journal of Michigan.
And I edit two national law journals, one state law. So I do the National Association of Consumer Bankruptcy Attorneys, the American Bankruptcy Institute. And yeah, I've been an associate editor of the State Bar's Law Journal since Pat McGill was the president. So 2-3 years now.
So today we're going to talk through a few questions. Alex has definitely had some experience working in this space. And so first question I wanted to go through was, you definitely help small business owners and families navigate major transitions after the law of the spouse. That's kind of your niche, a lot around business. Can you share what business owners and their spouses should be thinking about now to make future succession or estate issues less disruptive and more straightforward? What should they be doing now? What do you need to be thinking about if you're a business owner?
Yeah, I think it's a really hard topic, obviously, to approach your own mortality. I mean, I think I mentioned that while I do a lot of estate planning, I'm a guardian ad litem as well. You know, I haven't even executed my own estate plan, but I have a lot of simple artifices in place that I'm going to share with everybody that this is what we should be thinking about. And there's going to be a lot of repetitive themes here. So I think one of the things that I see, because I do estate planning, I do succession planning, and I also do general business law. One of the things that I see is there's, especially depending generationally, I mean, there's obviously stereotypes, but there are stark differences between generations. And one of the things that I see that kind of is pretty similar among all the generations is in a traditional family household where you have a married couple, everybody takes on their own pretty stark divided roles. Mm-hmm. There's always going to be one person who is typically focused on the finances of the house.
Yeah.
There's always going to be one person who's not so much focused on that, but maybe focused on how the house generally operates. And what I would say is one of the things that I see that's just super basic, people don't know people's passwords into anything. People don't know how to access mortgage accounts. So one of the things that I was mentioning, that's a simple thing that I started with my wife back kind of earlier in the marriage was, I mean, look, give her your login. I know there are some times maybe in a partnership where you're going through times you might not want to do that, but you know, at a certain point, presuming this is who you're spending your life with, I mean, you've got to bring them into the fold, because if you don't have a joint bank account, well, when the worst happens, they need to log into that stuff, at least to get information, communicate with people. So bring them into the fold. Bring your spouse, your partner into the fold. There are very simple ways to do this too, without necessarily, if you don't feel so comfortable, maybe giving the logins. You can name your wife as the payable on death or your husband as the payable on death for a bank account. It's a simple free thing that banks offer. You can also name beneficiaries of your bank account. Think about survivorship benefit designations on your life insurances. Think about that also for things such as your retirement plan, stocks, savings accounts, all those things. There's some real benefits to these lifetime designations, and that is they avoid the P word, which is probate. Everybody wants to avoid probate. Nobody wants it because it represents uncertainty. And all these lifetime designations avoid that.
Tell me, when you say lifetime designations, what does that mean, Ella?
So you make this election during your life to leave your account to these few people. So you're making a lifetime designation. So a designation during life, you don't have to, there's no probate needed because since you made that designation during life, you've already directed legally how it'll succeed without needing the court
I
to be
see.
in.
I see. It's kind of pre-designating
Yeah.
what happened to your stuff after you're dead when you can't do anything about it at that point.
And there's pretty simple things to do, especially in most states. There's uniform laws, and we're all pretty similar about, um, you know, how we can hold property in this country jointly. I mean, there's no state, in my experience, that kind of diverts from these relatively closely held universal norms. I mean,
Mhm.
basically every state allows you to designate, quote, a remainder man. That means you can, it's commonly called a ladybird deed, but you go ahead and you deed the property from yourself and your wife to yourself and your wife for so long as you live. There's usual magic words in every state, but in Michigan, it's so long as you live with an unlimited power of a lifetime power of appointment, and then presuming the house is still in your name at the time of death. If it is, it goes to whomever you name as the remainder man, and that's a great way to provide for. I mean, usually people are most worried about the house, and
Yeah.
they should be. It's usually, I mean,
It's their
most
biggest asset, right?
yeah, most normal people, their biggest asset
Yep.
is that house.
Their
And I
home.
can't tell you the amount of times I've been left
Mm.
holding the bag, as it were, cleaning up ancient
Interesting.
interests
Interesting.
or deeding the house from husband to wife, or just even people not really knowing how, through probate, or not even knowing how the deed's held,
Yeah.
not
Yeah.
knowing they're on the title, all these things.
Yes. No, I agree. I see that all the time. "How's your house titled?" And they're like, "I don't know. I guess it's in our names." Well, you may not wanna have it in your direct name. So good. So getting their houses titled in some type of a entity that will transition that asset after they're gone, right?
That can be beneficial, but you don't have to necessarily. I mean, if you know you want your house to go to your kids, and you've got a pretty simple asset situation going on, and
Mm, mm,
maybe you just do a ladybird deed from yourself and your wife to yourself and your wife, and then if it's in your
interesting.
name at the
And
time
you
of death.
don't have to have a trust to do that. You don't have to have a
No,
legal document. You
no, it's
don't
just a
have to
deed.
hire an attorney. You should, right? Because Alex
You
is
should.
good. But you don't have to do that, right? Based on your estate. Okay.
It's just a conveyancing document.
Interesting.
Michigan, where I primarily practice, we have what are called lady bird deeds, or a
Okay.
lifetime power of appointment deed.
Okay.
And you just file this deed with your local register of deeds. It
Interesting.
doesn't count as a transfer or a present transfer, so it doesn't uncap taxes. And it's a good way for people to provide for a succession mechanism without doing it. Every attorney that you go to is really going to primarily practices in the probate realm. They're going to want to set you up a pretty complex estate plan, maybe a trust, maybe a
Mhm.
life, maybe
Mhm.
a will with a pour over trust. And that could be really, really helpful
Yeah.
for estates that exceed a certain threshold, usually 1 to 1.5 million. But if you're just an average person, you just know what you have and you know where you want it to go. And so this is the kind of thing that we're trying to prevent against.
That's awesome. So it's called Ladybird. Is that a pretty typical name for that
Yeah.
across all states? Is that kind of
Yeah.
universal title for that type of a retitle?
Yes. So the American Bar Association has written myriad of journals about this idea. And so the story as it goes is that Lady Bird Johnson, Lyndon Johnson's wife, created this artifice. And what she did is she apparently, allegedly, published a deed from herself to herself, so long as she lives, measured by her life, and then to do with as she pleases during her life, and then to the extent the property has not been transferred, then to in fee simple.
From was Lady Bird. That's how it got its name. Interesting.
And so that's the lore behind the Ladybird deed. And so, like, if you were to go ahead and say, like, Google Ladybird deed, you would probably find something like that. But what you would definitely see, so like, if I Google it right now, so like when I Google Ladybird deed, I mean, it is so colloquial that AI,
Knows it and can do it.
yeah, knows it.
All right.
It's, yeah,
You can type it into AI and have it build one for you.
what I would say is that there's all over the internet, I mean, this is a form. It's a standard form. There's one that exists, and I mean, attorneys can draft standard forms, but I mean, realistically, there's certain things that we try to make easy for people.
That's very cool. That's very cool.
Yeah,
So you can get it, apply it, and submit it all on your
yeah.
own. That's way cool. I love that. So back to your earlier comment, Alex, about passwords. So my wife and we simulated my death. It sounds morbid, but we simulated my death a little while ago. I was like, all right, honey,
Yeah.
I'm gone. I'm out. You can't ask me anything.
Oh, I hate that.
What I'm leaving you is this piece of paper with all my
Where
passwords and where all of our money is.
Yeah, that's exactly what I
And
have
I
with my
sat and watched. I just sat in the background, watched her go to the internet. You know what I found? That I didn't update my passwords very well. So I gave them to her, and she's like, "This isn't working." And I'm like, well, of course it is. It's the right password. It's the right." She's like, "No, it's not working." And I said, "Oh, it's because the password changed." So I learned from that because we change our passwords so often, right? There had to be something that's electronic, that's easy for me to access, that could quickly be accessed by her by just knowing a password, so that they
right.
were constantly updated. But I love that you said that, because to me, that's one of the biggest pieces, is like, where is it all? What do I
Yeah.
have? I've had clients with an annuity that showed up in the mail 6 months later, brought it
Yeah,
in. "Hey,
absolutely.
what's this piece of paper?" "Well, it's $350,000 in a thing called an annuity. You probably want that, right?"
Yeah. I mean, a lot of times when I do, I'm doing what they call right now an intestate estate. So a will, a trust is what they call a testamentary document.
Mm,
Testacy or testate is the act of providing essentially for an estate post death.
interesting.
So testamentary documents in testacy have to do with wills, trusts, and all the other kinds of things that are basically instructions for a judge after you leave the planet Earth.
Yeah.
When you go ahead and you die intestate, it means that you don't have any testamentary documents.
Mm, mm,
Now, that right there is I have a case with it's a widow now, and she's being represented as the personal representative by her son, Anthony, who's a great guy. And his father was an educator for a number of years at Wayne State University in Detroit here. It's a fabulous institution. And he's a union steward, very involved, devoted educator, lots of benefits because that's what educators mostly have, no testamentary documents.
mm,
So he passed unexpectedly.
mm.
He had an aortic valve failure, and it was completely, I mean, this guy was healthy as an ox otherwise.
Whoa.
It was a genetic thing, a freak thing.
Wow.
And unfortunately, he passed.
Mm,
And nothing. We have nothing. We have
mm,
no estate
mm.
documents. And so a lot of what we're doing in terms of, well, but a lot of what we're doing now is playing discovery. And
Interesting.
so, if you don't have anything written down anywhere, what's going to happen is I'm going to be super sleuth with your relative. And so I'm sorting through your desk, I'm sorting through, your briefs, and it's hard. It's a hard
Anything
thing.
that you can find. So she wasn't terribly aware of all of the assets where they were, because it was a surprise. It was a surprise death. Mm,
And if you have a really traditional, stereotypical family household where, it's a single income household, right? And you got typically a man that's working and you have the wife that's home and taking care of everything. She knows what essentially he wants or needs her to know, but without thinking that she actually needs to know everything
yeah. Yeah.
or at least be involved into it. So and it's simple stuff. Like I swear to you, utilities.
Mm,
Like I've seen people have enormous utility bills or liens because they didn't know how to pay the utilities because they never paid the utilities. They never had to do that.
interesting.
Therefore, they never had to log on. They never had to make a payment. They never received a receipt stub from them.
Interesting.
So
Hmm. Hmm.
what I
So
did
those
is I went
build up and become a big issue to be discovered.
an issue. I mean, you're a widow. your power gets shut off and you didn't know you had a shut off. Your husband was really great with e-notices, but he opted into e-notices. So you're not getting paper notices. You can't access his email. God almighty. I've seen it. This is real stuff.
So without disclosing obviously too much about this woman, so what happens there? What do you have to do? Did you sleuth it? You have to go through and find out what's going on, but what happens as far as probate and as far as assigning responsibility? Like what's next for her?
So the good part is that her family structure is really strong. Her kids are fabulous, really lucky there. And so what I did is I invited everybody to my office. We went into the conference room. We all sat down, had donuts and coffee. I said, I can't give you legal advice, but I'm going to, basically, just because you guys should all know. And if you Google this, you can find it. Google everything. But the law is black and white, plain as day. In Michigan and in most states, we have the Uniform Protected Individuals Code, which is basically the estate laws. Or in Michigan, you have the Estates and Protected Individual Code, which is called EPIC. And so it's right out there. It tells you everything that's going to happen. And in Michigan, if you have a surviving spouse and you have an estate that's under $500,000, I mean, essentially the surviving spouse is going to get everything by default.
Okay.
And so basically
If
I
it's
sat them
under
down,
500,
right, in Michigan.
is that everything, all net worth, value of the
Yeah,
home,
that's
assets,
basically the
bank
entire net
accounts,
worth.
everything? Okay.
Yeah. There's a heavy presumption of it. And it makes sense, right? If you don't have a testamentary document saying anything to the otherwise, I think it's pretty safe presumption on the part of the state legislating this that the vast majority of that wealth should go to the
Go
surviving
to the
spouse.
wife. Okay.
Most people would say, like, if I die before my wife, I want my wife to get it all so she
Right.
can take care of the kids, right? I mean,
So under 5, that would go. And now that's Michigan. Is that dollar amount the same across the
no,
country? Does every
no,
state have a different dollar amount? They do. Okay.
well, to my knowledge, there's some similarities between state, but everybody's kind of capped it a little bit differently. And that has to do with kind of the cost of living in the consumer price index in that area. So Michigan, we have an exemption of basically the first 250, of 50% of the estate in the next 250,000. So if you have a $500,000 estate, she gets 50% of it, which is 250, and then the next 250,000. So she basically gets 100% of a 500K estate.
Mm,
So I sat them all down, and what I did is I said, look, you guys had an intestate estate with your father. What we need to do is get all this stuff into your mother's name, and then we need to plan her estate in a very simple way because all of these are cash assets. They're all retirement account benefits, TIAA with CREF
yeah.
portions,
Yeah.
things of that nature. We're going to get all that transferred into her name so she has individual benefit accounts. And very quickly, what we're going to do is we're going to designate you all as equal beneficiaries on them.
Yep.
Nobody's loved more than anybody else in this family. They all signed
Mm,
of waivers of notices and relinquishment of rights. And
agreement.
so what I did is I had them all consent to appoint my Anthony as the PR. And then basically what we're doing is we're just on a fact-finding journey, like literally, going to his house and sifting through documents,
Wow. Wow. Interesting.
going through his
Wow.
hanging files, finding stuff because his wife isn't looking at this stuff. She doesn't know what he has.
Yeah. Yeah.
And
And
so we
she's
get through it.
grieving. She's dealing with the pain of a
Yeah.
death. This is
Yeah, who in God's
this
name
is rough
wants to
for her.
go through, I mean, I have an old oak desk that was my grandfather's desk. God, help me. I know my wife doesn't want to go sift through my grandfather's
No.
desk that I
No.
work every day in,
No. No.
and go through all my hang files. So,
So will
you
she
know,
have to go through probate, or right now, no, because of the estate?
yes. So what I did is I applied through the probate court for simplified probate proceedings under a method that we call informal probate. And so when you can get consensus like that amongst all the potential beneficiaries,
Okay.
you can kind of end around some things. And what I would say is that's not very common, but
And that then doesn't require that $500,000 bogey. If they'll all agree,
right,
then
exactly.
the estate can be worth more than that. But if you can get everyone, and it just has to be the immediate family of The
So
deceased.
every probate code defines what an interested person or a potential beneficiary is. And so when you die in Michigan without a will, the definition's a little broader because in the parlance of a will, it's going to designate who the beneficiaries are. In Michigan, it's got, well, in most states, when you die intestate, they've got to look a little bit more broadly than that at who would potentially challenge it. So you're looking at
Mm,
surviving spouse, then your linear descendants, brothers and sisters. So it
mm.
kind of looks like a cross. You go above to the parents, you go aside to the spouse, you go the other way for the siblings, and then you go down for the children. And so when I map it, it looks like a cross or a plus.
Okay. Okay. All right. That's super interesting. Yeah, that's
Yeah.
great. That's great information. Great
And
information.
so I
So
try
one of
to,
the rules, one of the takeaways is know what's out there. At least
yeah,
be cognizant or have
talk
the
about it.
ability to see it.
Talk about it. Sit down. Does your wife know who provides the electric or husband, the gas, who the mortgage company is?
Mm,
That kind of simple stuff, it's critical. If you're not making the mortgage payments because you don't know where to make them to, and then the house gets foreclosed and you lose value in your own estate. I mean, God,
yeah. I never
after
thought
that,
about the utility stuff.
yeah, the utility stuff is unique.
Yeah.
It's Michigan, it's really dangerous because the water authorities are governmental.
Mm,
So you get a lien by operation of law if you don't pay your water utilities.
mm,
They can foreclose that lien. It's a danger, right?
mhm.
So you need to be a little careful about that. Then after that, when you have a broad discussion about kind of where all the stuff is and what it is, you can get more granular and you can start talking about, look, I know I work at, Maxwell Dunn PLC and I have a guideline benefit account and all this stuff. Go ahead, designate those things.
So in this case with this woman, because the CREF accounts had a beneficiary, I assume she's the beneficiary, right? She was the beneficiary on those, so those passed right directly to her without any issue.
Well, we don't know. We don't
Okay.
know, right? 'Cause he doesn't know.
Okay. So you got to figure that all out. You got to
Yeah,
look
figure
and
that out. I mean,
call CREF.
we're only gonna know if she's a beneficiary if it was previously designated and they discussed it.
Yeah.
And she's not gonna know. It's not like they reach out and tell her she's a designated beneficiary when he dies. She would have to know where the annuity or the asset is, send them the death certificate, and then hope beyond hope that she was named a beneficiary. They
Yep.
can't tell her unless she's named.
Yep. 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 No, that's awesome. And yeah, so not only know the assets, but maybe go through them and see, okay, so if you die tomorrow, am I named? Or does this go to somebody else? And heaven forbid that it doesn't go to your ex-wife. I've heard of that. I've heard of that
It
happening.
does, it does
And if it does, Alex, what happens? What happens if you find it's somebody that you know that she didn't want to
That's
have
and
her?
that's a hard part about those designations. They're undoable,
You
right?
can't change it, right?
No, I mean, you can change it, but prior to death. So
Okay.
post-death, there's no ability to change it. Those things are
Zero
self.
ability. No way. No amount of attorney time,
Yeah.
legal work. No
The
way to get it
contract
written.
made during life.
Really? Okay. So it
Yeah.
is set in
I
stone.
mean, the one thing that I could see would be if there was a beneficiary designation made at time A, which is 3 years ago. Later, there's a will, and the will specifically devises of that property, like it names the exact retirement account with the number, the account number, and it has a competing designation. Then there's
Okay.
I don't know how that would be resolved, and that's a hinky factual situation that I just concocted in my
Okay.
brain.
Okay. Interesting. So tell me about business owners. So business owners have a lot more complexity than the rank and file employee. So talk about that for a second from your experience with business owners and preparation before. Like what are some of the things that you've seen that are a surprise for them that you'd say now, like think about this and start to prepare this to avoid.
Yeah, so for business owners, I think it's a little bit there's a lot of difficulties here. I mean, the way business interests are held varies and differs pretty complexly state to state. right? I mean, in Michigan, you can have certificated or uncertificated stock shares. I'm not sure other states might have a little bit of more complexity to that. That complexity might have to do with actually, like if you elect a corporation instead of an LLC, maybe you do have to issue shares actually. Michigan, you don't have to issue shares. You can have uncertificated shares. So basically, you can have stock, but that stock doesn't have to have paper evidence
Mm,
in Michigan. How do you as a spouse know what that
where
is?
that goes.
Yeah, or where it goes. And so I think some of the things that you can do for this are kind of similar to what I've been saying. You know, you can go ahead and you can own those shares jointly as husband and wife, you know, and that's a way to go ahead and kind of prepare with rights of survivorship. You know, these statements are pretty common ownership vehicles that you can do during life. And if somebody mainly operates the company, you know, you can designate in your bylaws that, you know, while Jim and Jan are husband and wife and own 100% of the shares as husband and wife with full rights to survivorship,
Okay. Okay.
Jim is the manager of the company and has authority to control it. So just kind of simple designations can help you. The other thing you can do that is a little bit more complicated is engage in a trust to operate that business. That's way more complicated, but it's a way to keep it so that the business survives the individual person.
Have the trust actually own it or be
Yeah,
the beneficiary? Own it.
right. Own the
Own the
shares of the
business.
company. Yep.
Okay.
And then basically the trust can operate the business.
Okay. Okay.
And you have a manager of that trust, maybe a professional trustee, and the co-trustee be the president of the company, Jim. You operate the trust for the beneficiary of, you know, let's say Jim and Jan for their life, but when Jim dies, his shares to XYZ, his children. You know, when Jan passes her shares to XYZ equally her children. And that's a way to survive it. I mean, that becomes a little bit more complicated, but certainly many states allow joint ownership by husband and wife of these business interests. And that's a way to allow the business to transcend one person without doing a whole bunch of complicated planning.
Yeah. Yeah. That's great.
You
No,
know,
I love that for small
yeah,
business. That makes a lot of sense.
because we're trying to save money, you know, and we don't have a publicly traded company here. You know, this isn't in the S&P. We don't have public offerings. You know, we're not issuing actual paper shares that are licensed by the SEC and traded securities. We need to find a practical solution for people that are, you know, in this odd class, which is not a small business exactly, but not also a
Yeah, publicly
publicly
traded
traded company.
company with a lot of legal and a lot of ability to
Exactly.
really do all that. That's really cool. No, great advice. Great advice. Last question for you. I know when we talked earlier, and you've done this today as well as we've talked. This is really cool. Talked about like freebies. Like what are things that people should be doing with happen to go spend, a fair amount of money to do that. I appreciate your thoughts around Ladybird. Other things. I know we talked a little about like accounts at the bank. What are the things that are just like that aren't going to cost them money to go do, but are just good principles for getting ahead of the curve?
So, I mean, always, 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 always designate the beneficiaries. Do it. It's free. It's easy. It provides estate planning simply without paying money for it, really. Go to your life insurance, do the same thing. Go to your stocks, go to your certificates of deposits, do the same thing. On your car title, most states allow you to designate a beneficiary or a survivor, if you will.
Mm,
The house, simple thing, ladybird deed. Florida, Texas, and Michigan explicitly recognize the right to do so at statute. Most other states recognize it in some manner of speaking, but it's not governed by statute. It's governed by the common law. These are all free things anybody can do in at least Michigan, Florida, and Texas without an attorney because there's a statutory form, or specifically, like if you find the statute, there's actual language you can just copy and paste.
so for the car, I mean, that's one that often gets overlooked.
That's an enormously overlooked thing.
Yeah.
Also, many states, they allow you to do an affidavit of successor there for a vehicle. If the car is lien free and you're the survivor, you're the nearest relation, a lot of states like Michigan will let you do an affidavit, notarize it, bring it to the Secretary of State with the death certificate, and they'll give you clean title as long as the car doesn't have a lien on it. A lot of people get tied up, especially if you got Ted's classic car in the garage. It's a 65 Chevy Stingray, and
Yeah.
it's worth a lot of money. If you're the surviving spouse, you might not know what to do. Most states actually have that affidavit, and if you went to like the Sec of State, you could ask them, you have that form that allows you to transfer a car to the next of kin or the
Okay.
next
Okay.
closest kin.
Okay.
It's a simple thing to do. It always blows people's minds when I tell them about it.
So you'd go to the
Also,
Secretary of State or to the Department of Motor Vehicle? Secretary of State?
Michigan, the Secretary of State is the equivalent of the Department of Motor
Okay.
Vehicles.
Okay. So it kind of depends on the state, but there is a form typically in every state that
Yeah,
you would go and
typically,
access it. Okay.
typically,
Love
typically,
that. No, that's
it's
something that's
very
something that
common.
gets overlooked, right? I mean, yeah, and that could cause problems down the road for sure. No, that's awesome. What else? Any other things like that?
Um, Other freebies, I mean, those are the biggest ones for me. The beneficiaries are enormous. The car is kind of an extra added freebie.
Yep. Yep.
The Ladybird deeds are huge.
Yep. Yep.
That's really those are the biggest ones. Yeah, that's what I can think about there.
Yeah, my experience has been a lot like brokerage accounts, investment accounts,
Oh
custodian.
yeah,
That's pretty like, oh yeah, we've got to make sure those are good. But what I see it is the bank accounts, and
nobody does
especially in the
that.
death of a spouse, you've got stuff to pay, and if you're not on those accounts,
Yeah.
you don't get to pull it for a funeral. I've seen that several times where there's been somebody left to foot the bill for a while until they've gotten access to those bank accounts, and so
100%.
I
I
think we
mean,
miss those sometimes.
yeah, I mean, you can do a payable on death, you can do a beneficiary designation, you could even jointly own the account. So put somebody as, I mean, I know maybe you might want to do it with your spouse depending on what your relationship is, but you can always add your spouse to the account, as a co-owner or a joint owner of the account. I mean, that has some ownership implications if they never had ownership of that account before. I mean, you're giving them equity, but I mean, I don't have.
Yep.
I think there's some benefit to that. And then I went ahead and I designated all the beneficiaries. But yeah, it's something that you never think about. And the other thing that's good, say you're not the spouse of the person you're doing this with. Maybe you're the oldest child that takes care of the mom, or maybe you're the mom and you know that your oldest child's taking care of you. You're listening to this right now and you're thinking, what could I have Margaret do for me? Jan can go ahead and put Margaret on the bank account if she trusts Margaret,
Yep.
you know,
Yep.
or at the very least, she can designate her as a beneficiary too. So it's not just for spouses.
So if they're a little hesitant or not really ready to let someone become an
Control
owner
those
on the
funds.
account, then they could just do as a beneficiary. So if they die, then it goes. To
Exactly.
accomplish kind of a similar thing.
Yeah, very
It
similar
would
goal.
probably be a little easier though, right? Because then you don't have to go in and prove yourself as
Yeah.
the beneficiary of it.
Most of these designations can be done online through e-banking at this point. I mean, you literally sign a designation form. That's it. You might have to type in your social security number to verify your identity or some such thing. But I mean, it really is that easy. They want it to be low hanging because, I mean, no bank wants to sit around with funds that they can't use, right? And that's essentially what that is. They're just sitting there with somebody else's money, and at some point, they've got to file a notice of unclaimed property, and then it'll sheet to the state in the unclaimed property fund.
Yeah. Yeah. No, that's a great point. Alex, anything else from our conversation earlier that you thought in your prep for this podcast that you feel would be helpful? You want to make sure that we get it.
Yeah. I mean, what I would say is a lot of people strive for something really complex because it provides them comfort. I've seen people with labyrinthian trusts like 178 pages or whatever. I see those cases just as frequently as I see other cases that are way less complicated end up in savage bites. I very strongly believe that the more you put in a will, trust, or testamentary document, the more you leave a pot for people. that is you're relying on this document, the more likely there is to be fights about what that document means.
Wow. Okay.
So if you can do things during your life to kind of not allow that question at all, which is what you're doing with beneficiary designations. It's clear it's something done during life. It's the equivalent of me walking up to you and giving you $50,000. Just, I've done it on day one to take effect in the future.
Okay.
People can't fight about those beneficiary designations. They just are.
Mm.
And there's a good thing to that. What it does is it provides finality, and it provides people essentially a backstop to not go ahead and have those savage fights over, it's like, hey, I've left you all a trust. The residue of the trust is, X, but X is some unspecified, unquantified amount of money. The trustee is my old attorney. And you all have discretionary spending. What's everybody going to do? They're all going to try to suck up to the attorney and see how much they can get him to approve discretionary expenses for their health, benefit, and well-being.
So don't do that.
Don't do that.
Make it
Try to
simple, make it straightforward.
make
Don't
it,
leave anything to
yeah. As
judgment.
much as you can, try to reduce the amount of discretion that people will have after your death. Think about who you want to have it, make sure they get it, and make sure you do it during your lifetime so that people aren't fighting about it after lifetime. Don't leave a will that gives everything to your friend. If you want to give everything to your friend because your kids are ne'er-do-wells, make him the beneficiary so that the kids aren't fighting about that will after you go.
Mm.
I mean, because they will.
Mm.
It will happen. And as much as they say they won't, it will happen. I've seen all kinds of crazy.
Money does weird things to people, doesn't it?
Ruins.
Yeah, it does.
Ruins completely.
Well, Alex, dude, you're amazing, man. You've done this
Appreciate it.
before. Come on, you've done this before. You're a
Never. I've spoken at seminars, and I've spoken at, for the Institute of Continuing Legal Education. We do a creditor rights series, and I go in studio and we talk and stuff,
Yeah,
but
yeah.
nothing like this.
Yeah, you've done awesome. You're relaxed, you're chill, you got great advice. I've done this 20 years, Alex, and you taught me 2 or 3 things today that I frankly didn't know. So,
Well, that's the hope, because all of this stuff,
great.
it's not specific legal advice, right? It's stuff that if you were curious enough and you were Google happy enough and you asked the right questions, you would find it. It's there, it's free, it's out there, it is what it is. It doesn't require any analysis of anything. It's immutable, it just is. And so I feel like at some point in the future, there'll be legal help centers that kind of provide this low-hanging fruit to people. Like if you go to certain probate courts, this information is provided. Like if you were to go to my Livingston County court in Livingston County in Howell, Michigan, they have a probate help center and they have all these forms
Okay.
on the wall, and they have the decedent successor's affidavit for transferring the vehicle. They have most states have a form, even if you don't have a probate filed, to reimburse expenses you spent on the funeral. And these are ways to transfer property even without the will and all that stuff. And so they have all these things here. Most state court administrative offices have this stuff out there. People should know it. We should be shouting this from rooftops, and but also, who wants to learn about the law?
Attorneys do. You did, and there's a lot more, Alex.
There's so much.
No, that's those. Yeah. So the other piece is, I guess, if you don't do it all perfectly, there's still hope, and there's still ability, there's still ways, there's still services, there's still things that you can do. I know that's one thing for me over my time. No matter how hard we've worked, and we've worked very hard in a lot of cases to get everything ready to go.
Absolutely.
I don't think I've had one case, not one, that has gone completely perfectly without any hitch. Inevitably, there's at least 1 or 2 things that were like, didn't see that coming. Now what do we do? So you can try your hardest, you'll never be perfect, but you can definitely make life easier for those that are left behind.